Hello, 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 and welcome back to the topic where we highlight Houston Community College, our students, our programs, and our reach into the community. I'm Dr. Darin Baskin, the Executive Director for the Weekend and Honors Colleges, and we're here every Thursday afternoon when HCC is in session, live at 2 p.m. on Facebook and YouTube. You can also follow us on our social media channels at HCC Houston Community College District and watch us on HCC TV via our local cable provider. Today, we are fortunate to have in the studio with us one of our community partners who we work with frequently, who has helped not only our students, but also our staff. We are pleased today to be joined by representatives from PrimeWay Federal Credit Union, who will give us some advice about getting out of what you need to get out of your relationship with your financial institution. And I want to first bring up my friend, Mr. Michael Green, who is the Vice President of Business and Communication Development and Governmental Affairs at PrimeWay. Welcome to the show, Mike.
Well, thank you. Thank you for having me, Darin.
Yes, we are happy that you're here, excited because I am always happy to see you at events when you guys bring out and give us the financial literacy and what we need to better understand our finances.
Yeah, well, thank you. We appreciate you inviting us out, and we really love coming out.
Oh, that's perfect. So let's just jump right into it. So in Houston, we all know this. Everybody wants to move to Houston now. I don't know why. We have to figure that part out first. But even when you decide to move to Houston, there's no way to truly get around Houston unless you have a car. And so, it can be difficult if you don't have a car living in a city like Houston. But cars can also get expensive.
True.
So how can someone get an idea of how much they can afford to spend on a car?
Well, yeah, that's fairly simple. So to get an idea on what you can spend on a car, most lenders, when you go out to finance a vehicle, they're going to go, even PrimeWay will go up to 55% of your debt to income ratio. So what that means is, for those who are trying to factor that in, what that means is you take your expenses, not household expenses, but what's reported to you on the credit bureau. And that will be things like your credit card minimum payment, your minimum mortgage payment, your any loans that you have out there, those minimum payments. You add those up, and then you add your current car payment, what that proposed car payment would be, and then you divide that by your gross income. Right? Not your net, but your gross. And that, as long as that debt ratio, that number doesn't go over 55%, then you can qualify for a vehicle.
And you really broke that down. And that's important, because I think the most important thing you said is debt to income ratio.
Yes.
And the way you broke down the debt to income ratio as it relates to your credit report and not to your daily expenses that you spend in your home. I think that's important. So I'm glad you shared that with us, because we have a lot of individuals, not just students or staff, but people in general that they don't have that financial literacy that they need to have to get an understanding, especially when it goes to purchasing a car, because that's a big purchase.
Correct. Yes, it is.
Yes. So but also car loans come with lots of options. There's so many options, so many car dealerships, and so many ways that you can get one. How can people evaluate the trade-offs between monthly payments, interest, or total cost?
So those three things kind of go hand in hand. So what I would suggest that you do is, when you get that payment, when you calculate your payment, you never want to maximize yourself out, right? And you never want to go to that 55% of your income going to a car payment. So what you have to do is you have to be very careful with the interest rate that you get. You have to be cognizant of how much car you can actually afford comfortably, right? Because we all want the big fancy car with the all the bells and whistles, but it comes with a big fancy ticket as well. So you want to kind of balance those out to what you can actually comfortably afford, and not overextend yourself.
And you bring up another great point, and I want to add to this and see how you feel about this. You said the interest rate, and then you also mentioned how comfortable you are inside of that car payment.
Yes.
Because outside of the car payment, now you've added another bill on side of that car payment, which is the car insurance.
Yes.
So that's also something that I think we have to let them know this is something you have to add on to it as well.
Right. Not only the insurance, but you also have to add on other things like gap coverage, right? In case you have an accident, your the lender will pay off the balance if their car was totaled out, and you're not on the hook for the remaining balance of that vehicle. Not only that, then mechanical breakdown protection, right? You always want to have a comfort that if something happens bumper to bumper, you're not out of the money, right? And that normally goes from 0 miles up to 100,000, right, on that vehicle. So that's another piece that's factored into that debt ratio, but into that car payment. But you can also add that to that debt ratio because it's inside of the car payment.
Inside the car payment.
Right.
See, I think that's amazing, and we're giving you guys these nuggets of information that's important when you're going into making a decision to purchase that car. And just earlier, you mentioned credit score.
Mm-hmm.
We all know how important this credit score is to getting any form of assistance or any form of credit from anybody. Credit score affects your ability to purchase. What are some good sources of information on how someone can improve their credit to qualify for that car?
So great question. So if a lot of people want it right now, right? So, but if your credit score, and a lot of lenders out there will do low credit scores, right? But they're going to give you a rate up into 19, 18, 20%, 22% on that auto. And that's going to have you really stressed on your car payment. So what we would advise is if you can, you can come to the credit union, or you can go to other entities out there that can help you repair your credit or show you how to bring your credit score up. That way you get a better interest rate because you have a higher credit score. And now that keeps you from being as stressed, because for instance, if you're paying, let's say your car is $50,000 and you have a 22% interest rate, you're paying almost quadruple what you're paying in interest, what the car's worth. Right. So you want to be really cognizant of that and take advantage of credit unions and the certified financial counselors within credit unions that can help you manage and show you how to increase your credit score to be able to get a better rate. And that's not only for vehicles, but that's for a lot of other things, jobs and other things as well.
I think you brought up a great point. I mean, definitely happy to hear that PrimeWay offers this service, but also most credit unions are going to offer you the same services. So that's amazing. And it's good to hear from an executive from a credit union that's saying, please come in to a credit union and get the services that we provide for you and get the assistance that you need. So that's always amazing to hear. I want to say that, this idea of interest rate versus credit is very important. And Michael has hit on some great points as it relates to getting an understanding of what's the difference between your credit report and also this interest rate. So thank you for coming to the show, Mike. It has been a pleasure having you here. When we come back, we'll check out how savings accounts work. Checking accounts.
Sometimes what you need just shows up. Houston Community College has your back, whether you're knocking out some basics or upping your game for a better job. Enroll today for spring classes and frame your future with HCC.
For more than a year, we have kept you informed with more than 500 remote episodes. But now we're back, bigger and better, with more news and more guests. Join us live every weekday at 10 a.m. on Facebook and YouTube, and on HCC TV at noon and 5 p.m. You can watch from anywhere. We go where you go.
Welcome back to the topic. We're exploring banking basics with PrimeWay Federal Credit Union. And now I'm being joined by one of their great managers, Erik Smith. He is the branch manager at the Methodist location. So let's just jump into talking about checking accounts.
I'm ready.
Welcome to the show, Erik.
Thank you so much for having us. I appreciate being here.
Hey, and just for the obvious, we did not plan this.
We did not.
But we look good. So let's just make that known. Okay. All right, let's jump right into this. How have checking accounts changed in the past decade and banking in general?
So the principle of a checking account has been the same, but the convenience from today versus 10 years ago, I mean, you can do everything from online. You can do it from your phone. I can check my balances from my phone. I can get it to text me my balance. You have your bank in your pocket at all times. So the online banking has definitely made it way more convenient and safer, I think, or people who can manage their money better because they can see, hey, I just went to Home Depot and I got an alert already. Or I went out to eat and I got another alert that, my money's been, that money's been spent.
Yeah, so you gave the good side to that.
Mm-hmm.
There's also this other side to having everything readily accessible and available to you, as well as banking. Also, I tell you, I just had an experience literally last week where I was at an event, and it was one of the events where there's lots of vendors,
Mm-hmm.
and I guess I swiped the card too many times for the bank.
Yes.
And guess what they said? When the young lady said, "Oh, you're declined," I say what now?
Mm-hmm.
Decline who? Decline who? And so I think that helps also with being able to notice fraud.
Yes.
Immediately.
I'm so glad you brought up fraud because we see a lot of it, and you're able to protect yourself because you can lock your card on your online banking. You can make it where it alerts you every time. Anytime my card is swiped anywhere, I get a text message and I get a push notification from the mobile app. So it's kind of a curse maybe when I go out on the weekends and I see all those transactions coming through the next day, but it's a blessing, and more of a blessing.
Yeah. Hey, that's great. And we both talked about different types of banking situations. Now, how can we evaluate different checking account offers?
So it's really customary to what you need. So if you are someone like me who swipes your card a lot, find a bank or credit union financial institution that is going to work for you. Remember that they want your business. So you find what they can offer you that's best going to fit your spending habits, your saving habits, and find the best mold for how it's going to help you in the long run. So if you need that fraud protection, you're going to want to have somebody where you can lock your card. If you want to make a higher rate on your money, then find someone who's going to pay you to bank there, or the perks that you're going to get. I'm a big perks person. So you give me all the perks and I'm definitely going to bank with you.
Oh, see, and that's great advice, because even when you're going in and you're just trying to open up an account, especially for a student who's just trying to go in and open up an account, they're going to go with the first interaction that they get because they don't know the difference between the accounts. And if they see an offer that says, "Hey, new students, open this account, we'll give you $300," then they're probably going to jump right into that. So you have to read the fine print and read in between the lines.
Please read the fine print. I'm so glad you brought that up. Yeah.
Yes. Perfect. So we mentioned in a previous segment credit unions.
Mm-hmm.
So is there a difference between having a checking account with a credit union versus a traditional bank?
Yeah. So again, a checking account is the same principle, but I will say credit unions are not for profit. So we give so much back to the community and our membership. So we're able to offer lower rates on loans, higher rates on returns. So your interest rate may be higher. Your perks are going to be a lot better with credit unions. We answer to our members. And if our members get together and that's what they want, hey, credit union is quick to be able to mold around what our members want and make things happen.
Hey, you mentioned something, and you mentioned a word that I just love. I love to hear it, no matter who says it. Perks.
Yeah.
Yes. That idea of giving me something for me, that just draws me in. So I can definitely appreciate that. And just having those perks that come with being at a credit union is important because, like you say, you are there as a nonprofit entity that's there for all of the consumers that are part of that credit union. So
yeah,
perfect. I love that. So listen, let's jump into this too. Savings accounts. Are they still a thing?
They are a thing. They will
No,
always
they're
be a thing.
not.
They need to be a thing.
They
Everyone
can't.
who's watching right now. So with a credit union, you have to have a savings account with us because we put $5 in and you are a member. You could have $3 million with us or $5. You're a member. You get the same vote when you vote at our annual meetings for our board. But with your savings account, again, make it work for you. If you have money in an account, the credit union needs to be paying you for that money that's in there. So look at the interest rate that you're getting. And I would highly recommend that you try to have at least 2 months of expenses saved up for a rainy day, just in case something happens. You always want to have that security that hey, if something were to happen, I have a little bit of time to find another solution. So yes, savings account are a thing, and make those savings accounts work for you.
And you bring up a great point. You mentioned a rainy day. I have heard that over and over and over again, and that's what savings accounts are meant to do. They're meant to be there when you need them for that rainy day fund.
Mm-hmm.
So can you give us an idea of the different types of savings accounts there are?
Yes. So we have basic savings accounts. That's your everyday savings account. We have high yield savings. So there's typically financial institutions will have a high yield. They sometimes call it a money market. That doesn't mean that your money is directly invested in the market. What it means is it's just another name for a high yield savings. And it has different, qualifications and perks. That typically will earn you a higher rate. And then we have certificate of deposit. That means you lock your money in, it's going to make a higher rate, but you cannot take it out or you're going to get a penalty. So you need to know that this money is there, but I'm not going to use it for the amount of time that I'm going to put into the CD.
See, and I'm glad you broke that down because I think it's important to know the different types of savings accounts as well as the different types of checking accounts that are offered and available for us consumers to be able to use. And just having a good understanding of what each one does and the perks.
The perks. Make them work for you.
Yes, you have to make those perks work for you. So let me ask you this. When we are inside of a bank and we go and talk to a banker, and give me an example of how you would convince me to open up not only a checking account, but also a savings account.
So that's a good question. You want it to be bundled together. I want to be able to look at my savings account on my app and be like, okay, my savings has this X amount. And my checking has this amount. Do I need to make a transfer? Hey, can I move from my checking to my savings so that I can start earning that higher rate? If you spread your money out with too many financial institutions, that's more passwords, more logins. It's more hassle to move that money from one financial institution to another. So I do like to have it as a package deal. And not only that, but you get perks by packaging them all together. So it just makes sense to have your financial institution work for you and keep it all together.
See, I like that. I like the idea of perks as well as keeping everything together, keeping it in one location, less passwords, more convenience, and having that relationship built with the bank. So I think our credit union, I think that is amazing. So, Erik, it has been a pleasure. I'm glad we're twinning.
I know,
because,
I'm loving it.
Yeah, it looks good.
PrimeWay cream looks good on you.
Okay, you know what I'm saying?
Yeah.
Thank you. So when we return, we'll learn about how to buy a home.
Sometimes what you need just shows up. Houston Community College has your back, whether you're knocking out some basics or upping your game for a better job. Enroll today for spring classes and frame your future with HCC.
When I was your age, I was just like you, fascinated by stars. But now I get to search for life in the universe. And who knows, maybe life is looking for us too.
So we're like aliens to them?
Yeah. Does anyone want to be a scientist now?
I do.
Awesome. We need more girls in STEM.
Maybe we can find aliens.
Things could be stranger, but I don't know how. I'm going through changes, through all of the strangeness. I'm going through changes now.
Welcome back to the topic. Well, we're still exploring banking basics with PrimeWay Federal Credit Union, and we are now joined by Kelly Chaves, who is the mortgage sales manager. She's going to join us to talk about this extremely large purchase of buying a home and how it could be simpler, easier, and better to understand the process. So, Kelly, welcome to the show.
Thanks. Thank you. Glad to be here.
Hey, I'm happy you're here. So let's jump in. How can people evaluate whether it is better to continue to rent or to make an investment in a home? And let me just say, I just bought my first home, never wanted one before, bought one a year ago. Now I'm mad at myself. So please help everybody out so that they don't get to my situation.
Yeah, totally.
Yes.
So I really like making the homeownership process friendly and accessible. So we're just taking it back to the basics, and really how you're going to start that evaluation process is simply by having the conversation, whether it's with a trusted advisor or just amongst yourself with your family. What does that look like? And really having the conversation and beginning the evaluation. What does market research look like in your area? Evaluating your income, your assets, your credit, things like that. And some interesting facts that I was looking at before this, but just for example, the current average rent in Houston is $1,200. And that is actually, shout out to Texas, because that's 24% lower than the national average. So yay, Texas. So average rent in Houston, $1,200, average credit score is 664, and average sales price is 406. So if we took just that average statistics, that would get you a mortgage payment of around $3,000 to $4,000 a month. So evaluating where you are now, what that purchase looks like and what it's going to take to get there, and comparing that to what you're in now. Do you like that? Do you not like that? Would you go lower? Couldn't you go higher? What does that look like? And simply just starting that conversation.
I think you bring up a great point, and having the conversation, really jumping into your finances and getting a better understanding of what you can actually afford. And also going back to something that Mike was saying earlier about factoring also the interest rates to ensure that that's factored in as well. So I think this is a really good way to start the conversation as it relates to purchasing and buying a new house, because that's a big investment. And like I mentioned, I just bought a house. I'm so happy about it, but it was also at a time where investing, the interest rate was really high. And so you have to also find the perfect market as well. I think that factors in too, right?
Yes. So the way I like to approach it is be sure you're comfortable as you are in present day today, because we don't know what's going to happen a year from now. It's unlikely anyone knows what's going to happen a month or two from now, right? So the best practice is always to feel comfortable with what you're buying, what you're doing in that moment, and can you handle that as you progress into the future? And a saying that I really like to live by is you're never going to regret not overextending yourself. So you're just not going to regret living below your means.
Hey, I like it. And you know what? The next time I take my DeLorean out, I will take you into the future, and then we can figure out how to go. Yeah, we can figure it out. So let's talk about, once you have decided to buy, how do you set up a budget for the purchase of that new home?
So it's going to take a lot of introspection and just really kind of sitting with yourself and analyzing your finances. First things first, obviously, credit, income, assets, and liabilities are huge for us. You know, you're speaking my language. That's what we deal with all day long. So analyzing your credit score, where are you? Just knowing, so many people don't know their credit, their income, their assets, their debts, things like that. So actually knowing puts you at a huge advantage compared to someone who doesn't. So just having that, doing that for yourself as well is huge, as opposed to, relying on someone else. So doing that for yourself, credit, income, assets, and then evaluating how much money do I have saved right now to make a purchase.
I think you made a great point, because, setting aside a budget for a lot of people is a difficult task, because as we know, a lot of people have set finances for certain daily activities,
right,
monthly activities. And so to then sit down and say, okay, let me look at this budget and figure out how now I can factor in a $300,000 purchase, I think is a scary conversation, a scary place to start. So I think going into a financial institution, a credit union, to have that discussion, I think it's perfect. So I love how you laid that out for everyone. That's amazing. So you just talked about some of these. So what are some expenses that people don't really factor into, like when they're buying a house, like the closing costs, the mortgage insurance, the moving expenses? Because I can tell you again, I just did these. And when I got that closing costs, I was like, you're kidding me. You have to be. And then when I got the taxes at the end of the year, I said, I know you're playing with me. The devil is busy. So talk about it.
Yeah, so for sure the closing cost, absolutely the closing cost. So many people think, oh, it's just down payment that I need, but the reality is that there's a closing cost, which is just that, the cost associated to buy real estate in the United States. There's just a cost for it. So analyzing those costs, I always tell people 10,000. You really want to start that at least around 10,000, because if you don't spend all of that in closing costs, well, there's your money for the moving truck or that sofa or whatever, all these things that we're going to want, you know, when you get that new house. So for sure, the closing cost is a big one. One of the ones that I've been seeing pop up a lot is homeowners insurance. The cost of homeowners insurance has just gone up drastically in the past year. And I mean, I know some people who just have abandoned that home purchase because of the insurance being so costly. So homeowners insurance for sure is a big one on the radar right now. And actually for me, to give an example, you know, when we were saving and buying our house, one of the things that really took me back was the cost of an alarm system. I just did not know all that went into an alarm system, you know, so there's all these things. So I would say you can never prepare too early to buy a house. You know, we get people calling in, they're like, oh, I'm not sure, you know, maybe about a year. The more time you give yourself to prepare and really start analyzing your finances, what you can do, what you can't do, what does that look like? It's not early enough, in my opinion.
Yeah.
Yeah.
I think you made a great point, because you brought back this shocking memory of when I was also looking at the security system. I was like, oh, what? What is this? And then the big one for me was lawn care. Like,
yes.
And I was the one who said, I'm gonna buy a house, but I don't want grass.
Yeah.
But there's grass and it has to be taken care of.
Yeah.
So it's crazy, the expenses, but to have someone knowledgeable, someone there to be there to walk you through, to talk you through, to sit down with you is an amazing feeling. And that's why we have decided to bring PrimeWay Federal Credit Union here to give us this information so we can share with you and with the community. So thank you for joining us, Kelly. It has been amazing talking to you. I want to thank Michael and Erik also, and I want to thank you guys for joining us on the topic. If you enjoyed the show, follow us on Facebook and YouTube at Houston Community College District. To listen to the topic and more HCC programming, log into hccs.edu/podcast. And for the topic on HCC TV, I'm Dr. Darin Baskin. Until next time.